Welcome to the Microfinance Podcast. Listen to inspiring interviews and take a look at tools and products that are used in the field. This podcast is produced by MicroSave, market-led solutions for financial services, and is brought to you by Moving Planet Films.
Well, the potential of branchless banking for microfinance is enabling people to make transactions at retail stores. One of the strange things about the financial sector in general is that the delivery of the services is at stores owned by the provider. We know them as branches. That's not how most of the economy works. If Coca-Cola, for example, had to sell its Coca-Cola bottles at Coca-Cola shops, you can count on Coca-Cola not being as prevalent as today. So the opportunity that we have is to use existing retail infrastructures, all the stores that are in every village in every country, as points where you can do banking services, repay loans, make payments, and those payments don't have to be financial services. It could be sending money to your grandmother in a remote village, paying a utility bill, buying input for your micro enterprise. That is the real opportunity of branchless banking, being able to allow all these things to happen where people do their business today. Within that, the role of mobile banking is to allow those transactions to happen with trust, so that neither the microfinance institution or bank behind the transaction nor the client have to depend on the store owner to do the right thing by them. That's where the mobile banking comes in. The technology is substituting for the trust. All the parties in that transaction are authenticating themselves in real time. They have their mobile phone. There's a secure way of confirming my identity. Second, with the mobile phone, the store owner has a connection in real time with the bank. So the bank is informed, or the microfinance institution is informed in real time that there's a transaction happening, and the bank is authorizing that transaction. Third, in a branchless banking setup, all the transactions are between bank accounts and are offset by the bank account of the agent or the store owner. So this is not a case of I go to a store to make a deposit, for example, and I just have to hope and wish that the store owner gets around to going to the bank on my behalf. It's not working like that. The way it works, I give cash to the store owner, and there's an equivalent and offsetting transfer of value from the store's bank account to mine. So it's happening in real time. Instantaneously after that transaction, there is no credit risk involved. That is possible with mobile phones because of that connection in real time with the bank. And finally, the final element of the trust infrastructure is a receipt capability. Traditionally, with point-of-sale terminals, those are paper receipts. With mobile banking, there's a possibility of making them SMS, receipt by SMS, electronic receipts. On the one hand, customers may feel less comfortable if the receipts are not in paper format. On the other hand, it's actually more trustworthy because that SMS is coming from your microfinance institution as opposed to being printed by a device that is owned by the store owner. So there's a trust element there. So that is really the role of mobile in delivering branchless banking, is to have the trust infrastructure that makes it possible for a person to walk into any store, do their financial business without me or the bank having to trust the store. There's been many experiments with mobile banking to date. This experimentation has been of a very broad nature. There's been experimentation on the regulatory side. There's countries like Kenya and Philippines and South Africa that have been very innovative in allowing people to try things out. And there's been innovation on the business side. Within the business side, there's innovation that has been led by mobile operators, a case of Safaricom in Kenya, Smart and Globe in Philippines. There's also been innovation by banks, so where, for example, in Latin America, especially in Brazil, it's the banks that are pushing these branchless banking channels. And then there's cases in between, which is joint ventures between the two. We're also seeing cases where it's third parties that are coordinating and aggregating the power of the banks and the mobile operators, case of Wizit in South Africa. So one thing to note is the broad range of experimentation that we're seeing in terms of regulatory approaches, in terms of business approaches, in terms of technologies. As I said, some are using mobile phones, some are using more traditional card and point-of-sale based terminals. So the experimentation is all excellent, and I think it's too early at this point to say what is the winning model. So at this point, the best we can do is to continue in this path of experimentation and see what really works. In terms of what the actual experience has been from the customer side, what we've seen is that customers have been very ready to take up offers of making payments conveniently, electronically, through branchless banking channels. What we're not seeing so much yet is that being followed up with not only doing instantaneous payments, but being drawn into broader financial services, savings, insurance, and those sort of products. Part of the reason, I believe, is because getting trust is the fundamental element. As I said before, the whole trust is delivered through technology. People have to get comfortable with that. It's hard to communicate to people, trust me, this works. For payments, there's an experiential solution to the trust problem. Send money to your grandmother, because this is happening to real time. Call her, did you get the money? Yes, I did. Tick, trust worked. Do it a few times, and that's at some point you stop being so concerned about it. When it comes to broader financial services, like savings, for example, it's much harder to build that trust because that service is not time-bound. Over how much time, you can check that the money did go into your account, but over how much time does the money need to stay in your account before you can say, tick, it's safe? There is no specified time frame. And then if we're talking about insurance, obviously the trust circle is not closed until there's some catastrophic event that happens to you. So I think that's why these financial services will take longer to develop. That is not necessarily undermining the rationale for branchless banking, because just making it easier for people to make payments is already a huge service that we're doing for them. And over time, the experiential trust on broader financial services will catch up.